Welcome to Woods of Stardon. This is CH. I will be covering the Janus Henderson Horizon Biotechnology Fund in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the Janus Henderson Balanced Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos, and I'll be happy to work on it as long as I can find enough information on the product. Janus Henderson Investors was formed in 2017 through a merger of Henderson Global Investors and Janus Capital Group. Henderson Global Investors was founded in 1934 and had been more active in Europe and Asia, while Janus Capital Group was founded in 1969 and had been more active in US. The merger was therefore a combination of the investment expertise and market coverage of both firms. Janus Henderson is a public company that is listed on the New York Stock Exchange. Janus Henderson today manages over $490 billion of client assets through 350 investment professionals located in 25 offices globally. US clients cover about 2/3 of the business, while Asia Pacific is small at just 9%. The Henderson Global Investors branding used to be more popular in the region. However, the firm hasn't really been putting that much effort in its Asia product offerings after the merger happened. Product category-wise, equity solutions take more than half of the firm AUM, which is where this fund falls under. The Janus Henderson Horizon Biotechnology Fund is a sub-fund under the Janus Henderson Horizon Fund family. The fund family is set up as a Luxembourg SICAV company structure and is UCITS qualified. The fund is registered as a MAS recognized scheme, which means it is suitable for retail investors. Janus Henderson treats healthcare as an investment team with its own webpage, and has a dedicated healthcare team that runs 2 healthcare-related funds, of which the Janus Henderson Horizon Biotechnology Fund is one of them. Janus Henderson advertises it as a dedicated team of 9 members that are healthcare sector experts that are strong in research and disciplined long-term investment approach. Andy Ecker is the team lead and was with Janus since 1999. Starting from a sector research analyst to the lead portfolio manager role today. Daniel Leons joined Janus in the year 2000 with a PhD in immunology and postdoctoral research with Nobel laureate. Augustine Mojidas joined Janus Henderson in 2019 with a PhD in medical engineering and medical physics. The 3 of them co-manage the fund together, with Andy and Daniel since the fund inception in 2018 and Augustine added in 2023. The thematic webpage also lists the rest of the team that supports the 3 portfolio managers. All team members have a short intro video available that I find is a nice touch and gives more visibility and recognition to the people behind the fund. The Janus Henderson Horizon Biotechnology Fund webpage and fact sheet do not provide any additional information on the investment strategy, so let's get into the fund prospectus directly. The investment objective of the fund is very simple, that is to aim to provide capital growth over the long term. As a thematic equity product, the fund invests specifically in biotechnology and related companies globally, with no country or market cap constraints. The prospectus provides a clear definition of what companies are considered in the investment universe. Firstly, relying on the Nasdaq Biotechnology Total Return Index that has about 260 stocks, and then further broadens the universe by including any companies that are involved in the development or marketing business of small molecule or biologic drugs, as well as companies involved in the biotechnology supply chain, such as equipment and service providers. The fund has defined the Nasdaq Biotechnology Total Return Index as its benchmark, although the investment universe of the fund is broader, as mentioned earlier. The fund does have a performance objective to outperform this index by at least 2% per annum over any rolling 5-year period. We will see if this is achieved when we go through the fund performance later. The prospectus also provides a short paragraph on the investment strategy of the fund, which is helpful compared to many other mutual funds in the market that do not provide any information at all. Biotechnology is a more unique and specialized healthcare subsector where the success or failure of drug development and drug approval has significant impact to a company's value and share price. The investment team uses a proprietary statistical model to analyze the probability of this success, as well as additional tools such as physical surveys, prescription models, and scenario simulations to try and make more accurate predictions in order to invest in the companies with the highest growth potentials. This also means that this sector and this fund will tend to have high volatility spikes at times. The fund is based currency in US dollars, although the fund may not necessarily hedge all its underlying positions to US dollars, which is typical for most equity funds. There is also a brief mention here about performance fees, which we will go through when we look at share classes later. The Janus Henderson Horizon Biotechnology Fund was incepted in December 2018, giving it well over 7 years of track record. Fund AUM is at a very decent 1.56 billion US dollars, while there are not that many biotechnology specific funds in the market. In Singapore retail market, there are only 2 such funds available, with the other fund being Franklin Biotechnology Discovery Fund. The benchmark of the fund is Nasdaq Biotechnology Total Return Index, as mentioned earlier. The fund webpage and fact sheet provide enough details on the portfolio breakdown that compares against the benchmark. I like the chart format used in the webpage better, so I will be referring to them. Here are the region and country breakdown. As the benchmark covers stocks listed on the US Nasdaq Stock Exchange, it is inevitable to see the benchmark having a near 100% US exposure, with just about 6% of Europe. While the fund has more flexibility with a broader investment universe, it also has a high 85% US allocation, with the rest in Europe. Investors should be mindful of this high US exposure and not expect to have a well-diversified portfolio in geographical sense. This also means that while the fund is a biotech-focused strategy, it inevitably will have a high correlation with the broad US equity markets and be impacted when there are significant market volatility. For the healthcare subsector breakdown, we can see the fund is quite similar to the index, with about 84% focus in biotechnology classified companies. This follows with about 14% in pharmaceuticals, while healthcare equipment, technology, and services are minimal. The similarities seen in the index suggest there simply aren't enough companies in the universe for some of these subsectors, which restricts the fund from having a better sector diversification. Market cap breakdown is where the main differences are shown. Compared to the index, the fund is visibly overweight on the smaller cap stocks of $10 billion and below, with about 60% allocation. In contrast, the fund has only about half the exposures of the index for the larger cap exposures of $100 billion and above. The huge differences here suggest that the fund is actively looking for opportunities to differentiate itself from and to outperform the benchmark index, which is a good thing. We will see if this successfully translates to good performances later. The fund fact sheet indicates that the portfolio currently has 77 holdings, which seems to be a decent number considering the fund is tilting toward smaller cap companies and therefore should spread out the risk across more names. Top 10 holdings data in the fact sheet is a little dated, but shows the fund seems to have a soft cap of 3% for each holding, again to reduce concentration risk. The top names like Praxis Precision had a price spike in Q4 last year, resulting in the anomaly high weight in the portfolio, which I think the fund will probably trim some to take profit. Morningstar provides some additional information on the portfolio as shown here. The portfolio is indeed focused on small and mid-cap segment, with a small growth bias. Financial ratios and measurements look quite mixed, though I think it is hard to tell much from this data, as companies with successful drug development and approvals will get a sudden price and growth spike, and vice versa, leading to quick changes in this data. All in all, I think this points back to the investment strategy mentioned in the prospectus that we went through earlier. The biotechnology sector tends to be volatile, and the main reason for investors to invest in this fund is not so much about the portfolio construct, but more about the belief on the ability for the fund managers to predict winners and losers more accurately than the broad market over time, by relying on their sector-specific experiences and their proprietary analysis tools. As a healthcare subsector thematic product, the Janus Henderson Horizon Biotechnology Fund doesn't come with too many share classes. The normal retail share class offered is A class. The fund strategy has no income objective, and companies in the biotechnology sector generally has little to no dividend payouts, so the fund offers only accumulation share classes that is also denoted with the 2 after the A. Besides the base currency US dollars, the fund also offers Sing dollars, Euro, and Sterling currency classes in both currency hedge and unhedged versions. The A2 US dollar class was launched at fund inception in December 2018, while the Sing dollar hedge and unhedged classes were launched about a year later. The fee structure for this fund is a bit more complex. A share classes have a 1.2% management fee. Adding other expenses gives a total expense ratio or TER of around 1.9%. Investors should take note that the other expenses for this fund is rather high compared to typical equity funds. Up to 71% of the management fee can be paid by Janus Henderson to distributors as trailer fees. Distributors are also allowed to charge up to 5% subscription fee for this fund, although I think anything more than 2% for mutual funds is excessive. The fund also comes with a 20% performance fee that is uncommon in mutual funds these days, and more commonly found in hedge funds. Janus Henderson, however, still has this performance fee structure for quite a number of their funds. This performance fee follows a yearly period starting 1st July and ending 30th June of the following year, subject to high watermark. What this means is that the last NAV of the previous year period is set as the high watermark, and the performance of the benchmark index is set as the hurdle rate. The high watermark plus the hurdle rate together becomes the hurdle NAV that the fund needs to exceed in order for performance fee calculation to kick in for the yearly period. A 20% looks high on its own, but this is calculated on the outperformance, so the fund does need to first deliver a positive return that leads to a higher NAV than its history. Assuming the fund delivers a 20% gross return, that means the performance fee is 4%, and investors get about 14% after subtracting TER. The high watermark feature also means that the fund needs to generate positive returns, plus better than the benchmark, before performance fee is being calculated. At the end of the day, as investors, what we are really concerned with is the eventual net return that we get from the fund. So if the fund can continue to deliver strong returns over the long term, the performance fee structure really serves to encourage the fund managers to work harder and perform better, and should not be a detractor to consider the fund. The Janus Henderson Horizon Biotechnology Fund webpage and fact sheet provides performance data across various time periods, comparing against the Nasdaq Biotechnology Index, as well as the Morningstar Sector Equity Biotechnology average. As usual, we will first ignore the data that comes with a max subscription fee because that doesn't reflect the fund's performance correctly. Based on the data, the fund has had a pretty spectacular 1, 3, and 5-year period that significantly outperformed both the Nasdaq Biotechnology Index as well as the Morningstar Sector Equity Biotechnology average. Calendar year returns can be found in Morningstar. That shows the fund has had a good run since its inception. The high volatility expectation can be seen quite clearly in these numbers though, with the fund delivering as high as 61% in 2020 and then down to -5% in 2021. Overall, the past 7 calendar years have been generally great for the fund as it delivered high double-digit returns in 4 years and had only 2 years of low single-digit negative returns. Let's run some comparisons using Morningstar charts. Here is the fund since incepting in late 2018, comparing against various ETFs representing different equity market segments, from ISAC for global equities, to CSPX for US equities, to IYH for US healthcare sector, and to BTEC that tracks the benchmark of the fund that is Nasdaq Biotechnology Index. The fund has managed to outperform all these ETFs for this time period, although the journey has been pretty volatile. This firstly shows that the fund has clearly outperformed the benchmark over time, and by a very decent amount, which suggests the investment strategy and active management of the fund has been and continue to work well. Secondly, this shows that actively managed biotechnology theme funds, such as this fund, can be a very worthwhile thematic or tactical investment in a portfolio, as it can serve as a strong returns contributor. Investors, however, do need to understand this comes with higher volatility than the broad markets, and therefore should adjust the exposures according to individuals' risk tolerance. Here is a 1-year chart showing more recent performance of the fund versus the markets. Here, we can see that the US healthcare sector has been a poor performer compared to global equities and US equities. But biotech sector has been doing great, and the fund has delivered a much more stellar performance. I mentioned earlier there are not many biotech funds available, and Franklin Biotechnology Discovery Fund is the only other fund offered in the Singapore retail market. Performance of the Franklin Fund is much more similar to the benchmark index as seen in this chart, suggesting that it runs a portfolio that is less differentiated to the index compared to the Janus Henderson Fund. Between the two, Janus Henderson Horizon Biotechnology Fund is a clear pick for investors seeking a strong active manager. Finally, let's take a look at the Sing dollar share classes of the fund. As the fund invests mainly in US stocks, we are essentially looking at the Sing dollar to US dollar currency hedging cost for the hedged share class and the Sing dollar to US dollar FX movement for the unhedged share class. Interestingly, both the Sing dollar share classes displayed near identical performances since their inception in 2019. Looking closer at past 1-year chart, we can see that the Sing dollar unhedged class lost about 7% due to the Sing dollar US dollar FX movements, while the Sing dollar hedged class lost about 5% due to the currency hedging costs. As such, Sing dollar investors wouldn't have had too much difference picking one share class over the other. Now these number differences don't stand out so much in this chart because the fund has had a stellar performance in the past 1 year, and they will obviously be more impactful if the fund has a flattish or negative performance. With that, let's summarize our findings. Janus Henderson is a decently sized global fund provider with over $490 billion of AUM and is the result of the merger of two firms of long heritage. The fund is managed by a specialist team of 3 co-managers supported by 5 broader healthcare team members. The 3 co-managers are highly experienced and well qualified academically. The Janus Henderson Horizon Biotechnology Fund is an investment solution that specifically focuses in the biotechnology subsector or theme within the healthcare space. This plays into a small investment universe, and therefore, investors should expect increased volatility that comes with higher return potential compared to broad equity markets. Given the biotechnology sector significantly rewards drug development winners and penalizes losers from a share price perspective, the fund relies on proprietary statistical model as well as specialized investment approach determined by the fund managers to try make more accurate predictions in order to invest in the companies with the highest growth potentials. The resulting fund portfolio shows distinct differences versus the benchmark, particularly on the market cap exposures, with the fund favoring smaller cap companies that require more research but comes with higher growth potentials. This has successfully translated into a strong performance track record since fund inception that has exhibited significant outperformance versus the benchmark as well as broad equity markets. Again, this is accompanied by a higher volatility and drawdown that investors should be more aware of and comfortable with if they are considering this fund. The fund also has a performance fee structure that may deter some investors who are fee sensitive. Personally, I am not so concerned with performance fees, as long as I am happy with the net return of the product that I get eventually. In conclusion, there are not that many products available for biotechnology exposure, and the Janus Henderson Horizon Biotechnology Fund certainly looks like a strong pick for its good long-term performance. Investors should take note that the strategy focuses on a small market segment that comes with higher volatility, and therefore should allocate prudently in accordance to individual risk tolerance. This concludes my absolutely biased comments on the Janus Henderson Horizon Biotechnology Fund, and I hope it will help in your investment journey. May we all grow wiser and prosper.